Hi, hello, good morning, welcome. This is Real-Time Day Trading Ideas, our global webinar series. We have 5 days a week, 5 different traders. We will speak about trading ideas, strategies, market screening, maybe 1 or 2 questions from your side directly answered in our webinar. Our goal is quick and smart, but for that daily. So let's have a nice start like every day. And today it's Tuesday, 27th of November, 2018. Welcome to Admiral Markets. We will start like every day with our risk disclaimer. Trading with financial instruments offered by Admiral Markets carries a high level of risk, which is not suitable for all investors due to their complex nature. If you are a starter, please start with a demo account and make yourself familiar with long trading, short trading, leverage trading, and your personal risk management. If you'd like to read the full risk disclaimer, just visit one of our regional web pages, for example, admiralmarkets.com, and you will find the long version there. If you are in the European Union, of course, you will find also the information about retail clients and professional clients. Since the ESMA regulation is in force, it's the topic of the year in the European Union for all CFD traders. So if you'd like to learn more about that, just visit our web pages. Or a picture shows more than 1,000 words. Here are 2 prominent examples, DAX 30 or also Euro dollar. The margin requirements could be quite different depending if you're a retail client or a professional client. If you're a professional client, you'd like to apply for the professional client status, just go to our web pages. Here you see a specific link. Retail clients still have a big benefit. It's called unlimited protection against negative balances. Professional clients don't get it via regulation, but some brokers and of course also Admiral Markets offer an additional protection. It's called negative balance protection policy, and via that also professional clients get a protection up to 50,000 British pounds according to our policy. This is me. My name is Jens. I'm the German guy from Admiral Markets. We are a big international Forex and CFD broker. So my English made in Germany, but I'm not the main speaker. The main speaker is the day trader of today. This is our usual scheme. On Monday, it's Jay's day. Usually on Tuesday, like today, it's Paul's day, but Paul is out of office today. So we have a replacement candidate. It's Jens. So in a couple of seconds, it will be Jens' day. On Wednesday, it's Giancarlo's day. On Thursday, it's Marco's day. On Friday, it's Dirk's day. Our leading day traders live every business day, every trading day to the same time. And of course, if you like to trade Forex and CFDs, you will get many benefits only with us. DAX 30 or also Euro dollar, tubular spread of just 0.8 pips or points during main trading hours without additional conditions. Check it out on our regional web pages like admiralmarkets.com. Like said, one world, global offers. We are a global player. A global webinar series. If you'd like to check out what we are doing in the European Union or our business in Chile or also in Australia, you can do so. Just visit our webpage like admiralmarkets.com and find out more about that. So this is our usual moderator, but he's out of office today. So I say good morning, good day, Jens. Thanks for jumping in. What's your view to the markets today?
Yes. Also, good morning from my side. Thanks for having me here today. As I already said and introduced, I will replace Paul today. And this is, by the way, me. So usually you should now see my screen and my picture here. But we will start right here with the chart. And as usual, in fact, and this is something which I did over the last months all the time when I had the chance to speak here, presenting my favorite setup, in fact, for the EURJPY. And we have one for today again. I'm not really sure whether I should be happy about it or not in the current market environment. So around, I think it was 8:30 German time, we had a short spike. It wasn't just in the FX markets, and here in this case, by the way, as you can see in this candle, the candle with the high and the low, right now here marking the range we want to consider for our trade setup for today. These two horizontal blue lines. That was also something we could spot here in the DAX, for example. This is what we'll have a look later on. So in the 5-minute chart, you can see that here at 8:30 German time, there was a quite big spike, which resulted is now resulting in a quite wide open range for the day, high and low for the day currently. So one might ask, okay, what's the reason for that? Why did it happen? In fact, for me, it came as a big surprise, and I had to search myself. But it seems as it has something to do with a call between Chancellor Merkel and the Russian President Putin here around the again rising tensions around is it? I think it's called the Black Sea, right? It's around Ukraine, and again, tensions building there, geopolitical tensions, and which already arose, by the way, over the weekend, and which makes it very difficult to see this as the only reason for the spike higher. Because if these tensions were a topic already yesterday, it's quite difficult to understand why the DAX was capable of presenting itself that strong yesterday, because or main driver that was what was communicated was probably the negotiations around the Brexit and the fact that the European Union and so Theresa May, the UK Prime Minister, respectively Great Britain, agreed then or signed the agreement around the Brexit, which is surprisingly, or was surprisingly bullish, because we have to say that there's still some strong headwinds to be expected for Theresa May in front of the UK Parliament, because it's very unlikely, I think, that this deal will go through without big problems. The thing is that many already said, or it wasn't just many, but I think it was Theresa May herself, but also Jean-Claude Juncker, if I'm not mistaken, who said this is the best deal possible. The thing is that I think it is not the last deal which will be offered, because again, UK Parliament will most likely vote it down. And the day to be excited about in this context is, I think, the 11th of December. So I think before Christmas we have good chances of seeing higher volatility. But let's come back to this spike higher in the DAX and this potential call between Merkel and Putin here in the morning, where there was something said around let's try to find a solid solution for this rising geopolitical tensions again. Whatever was the reason, it's the fact that the DAX spiked higher, respectively, EURJPY spiked lower in this context. By the way, if you're seeing kind of a reason for a risk on, then based on that, usually you do not expect JPY to get stronger. And that's one of the reasons why I think it's something different. Even if someone is probably bringing this up, I doubt it, to be honest, that this is the only reason. In case of the DAX, especially when looking at the time span between 8 to 9 a.m. German time, this is when it's only the future DAX is open. And it's usually a very thin market environment. And then with low volume, it's possible to get a big move in one or the other direction. And when seeing, in case of the DAX, for example, that the market pushed above the highs from yesterday, this gives us a better picture of what potentially happened there. Probably was just an imbalance in the order book which happened there. But however you put it and whatever you see, the thing is that for EURJPY, we now have a short setup. Again, I'm not really happy about it, because if you zoom out of the chart, you can see that the overall structure is very, very choppy. It's very unattractive, and it's the complete opposite of what you want to get to see when trading such a breakout setup. So usually what you want to see is a trending market. It's not that every trade is a winner then. That's definitely not the case. But you have a clear advantage on one or the other side. And if you trade the break in direction of the advantage, the trade will more likely to turn out to be profitable than to be not profitable, since you expect markets to go in trends and to continue going in trends. That's the short version, a very rough version of that, but nevertheless, I think it gets the job done to understand why this is definitely not the market environment you want to position yourself in. There are many, many fake signals, or no, fake breakouts. It's not fake signals. There's a signal, yes, but it's a potential fake breakout. If it's on the upside or downside, doesn't really matter. And the market has trouble to really then take on momentum in direction of the trend. Yesterday, we formulated the setup, by the way, which wasn't triggered. Some of you probably have listened to yesterday's webinar. There we had, based on the fact that we were trading above this purple line, this is the exponential moving average 11. we had a buy stop in the market placed here, but this setup was never triggered. And then over the last hours of trading into the end of yesterday, of Monday, the setup turned around, but also here the trade wasn't triggered. So yesterday was no trade at all, since no breakout occurred. So for today, we will use the same technique again. Therefore, I've already presented a document here, and I write it down. And to explain, that's the main reason. First of all, the setup. But also what components, parameters are in it right now. So what do we have? So we look at EURJPY, and here, by the way, let me just enlarge this a little, probably better. So it's EURJPY, and now we look at the range between 3 to 10 a.m. It's Central European time, so German time. And then we look at the high-low of this range, which is marked here with these two lines. So the low of this range is 100 and here it's 128.37, and the high of this range is here. This is this candle, and there we have 128.84. So this is the range we are looking at here. And then we say, okay, next step is we have to identify an advantage. So let me probably do it that way. Identify range. So I think there's a identify. I think it's right, but okay. Identify advantage. Identify the advantage. Therefore, we'll use the EMA 11 on an hourly chart. Means we trade above it long. Second, we trade below it short. So so let's do it that way. And what you can clearly see here is that obviously we are trading below this purple line. Okay, so we are here looking at the closing price, trading below that. That means today we'll focus on the short side, and then we formulate in 3 the setup. So probably it's better to go that way. Zack, zack, zack. So, and then we'll formulate the setup. So that means we are entry short. Let me do it in black again. 1 sec here. So there we go. So we say, okay, entry short, if we break below 128.37, then we have our stop placed, in this case, above the range, so at the high, which is 128.84. So our risk is 47 pips. And then we have our target, and the target is, in fact, we call this equals to 1R. Our target can be found from and it's a statistically calculated target. It's 1.7 times our initial risk of 47 pips, which then comes down to 80 pips chance. So our target is 128.37 minus 80 pips. So it's 127.57. And this is the reward, which is 80 pips. And there we have 1.7R as the target. And this is the setup for today then, based on this range. Let's just see whether it plays out or not. What I can say is today it's mainly technical. By the way, I haven't placed the take profit level here. This is something you can now add with the mini terminal. The way that you just click on, in this case, the sell stop order here, and then you can include the take profit here. So you have a fixed price, and there we have 127.57, and we have it. And there we go. So what do I want to say? Oh yeah, so the economic docket, the economic calendar today is very, very thin. So I prepared it here on the website from Admiral Markets. You can find it via the tab Analytics, and there the Forex calendar. And what you can see is that today it's a very, very thin docket we have. So the main drivers will be political news in some way, probably around geopolitical tensions around the Ukraine and the European Union, Russia, probably the US. Closely watch the Twitter feed from Donald Trump, probably. Then there's also any news around the Brexit negotiations. What we can already say is that there is plenty of headlines again, which Theresa May will definitely face. And I think again, this Brexit deal won't go through the UK Parliament. We had this already 2 weeks ago, and I think the overall tide hasn't turned. So that said, I think it will be really difficult to get a solution here, and it's probably not the worst idea then for the European Union to somehow, at least behind closed doors, discuss already ways to how to deal with such a potential and very likely turn down of this agreement. And so these will be the main drivers. The only thing is we just do not know when these news will hit the wire, and especially what news will hit the wire. Probably today, consumer confidence here from the US is probably at 3 p.m. London in this case, so 4 p.m. German time. Probably something to closely watch, even though I have to say it, I don't really think that this will move the market. So today, the market will mainly be driven by technical aspects. I could imagine, let's come back here from EURJPY again to the DAX. I could imagine that probably the DAX won't show much volatility, in fact. So probably here's an even bigger chance that we'll get to see a consolidation at an elevated level, at least as long as we trade intraday above 11,320 points. This is the region around the lows here from the afternoon of yesterday, let's say. So it's a short-term level which should be closely watched. If we drop below that level, there's a good chance that further losses down to the lows from yesterday, 11,250, 260 points, probably also a gap close then, around 200. These are the highs from last Friday. That such a move lower is initiated, even though I have to say, I think the DAX is more likely to present itself choppy, stable in this region. If we can succeed to close above on daily time frame above 11,400 points, I think this could probably, if such an attempt is successful today, probably tomorrow, then into the end of the month of November, there's a good chance that probably further gains are likely, which will push the DAX back towards 11,600 points. But all in all, the picture in the DAX is not very, very promising. Something probably a little, which is a little different here in the euro. So if we go down here to the 50-minute chart, also here, I mean, again, the economic calendar is very thin, but from a technical perspective, it's interesting to have a look at the Euro USD, because as you can see on a 50-minute time frame, you have a sequence of falling highs and falling lows. After the Euro USD failed to make it back above 115. And now the thing is that here, around this high volatility shortly before the spot market in Europe opened, there was also a short spike in the Euro USD here on the upside. By the way, let me just probably include the following here so that you know which currency pair we are looking at here. So 15 min, let's do it that way. So the interesting thing was that we didn't make it above the Asia highs here, but we failed, and in fact, not only failed to do so, but broke below the lows from last Friday, respectively, yesterday. And now, with this push here against this level, this is probably a potential short trigger, which could be of some interest. So currently, okay, the idea just the idea is not necessarily given anymore. Now with this push higher, it's not a big deal what we get to see here. It's only 10-15 pips, but nevertheless something to closely watch, because we failed to make new intraday lows here with this attempt around 20-30 minutes ago. And with this in mind, that's probably something to closely watch now, and probably we're done on the downside, and it's more likely that we get to see some choppy sideways action. But nevertheless, as long as we trade below the Asia highs, respectively the highs which were marked here overnight, the advantage should be found on the, or should be seen on the downside from an intraday perspective, even though therefore it's necessary that we push below the current daily lows, below 113, and then the first target would be activated around 112.50 to 112.60, I think. Yes, and so in fact that's it from my end. So nothing more to add, to be honest.
Thanks to Jens. Tomorrow is another day. We have 5 days a week, 5 different traders. If you like this webinar, just visit us tomorrow to the same time. And if you'd like to see and watch that again, in a couple of hours, it will be available on our YouTube channel. Just go to youtube.com/AdmiralMarketsFX. Thanks to Jens. Greetings from Berlin office. All the time good trades, and hopefully see you tomorrow. Bye-bye.